Welcome investors to Joe's Investment Express. Let's look at the video that I made. Let's revisit ledges and the video that I made on shorting JBHT. I made a video about 8 days ago. The short has worked really well, as I had hoped. And let's just look at what happened, and now we got to figure out when to get out. So here's the 1-year chart. Oh, and before I begin, just remember this is not financial advice. I'm not a financial advisor. Have been investing for about 25 years. And like the video if you like the video. So yeah, here's the 1-year chart. And if you might want to go back and watch my other video first. I'll link it in the description and at the end of the video. But basically I was talking about trading ledges. When a stock breaks down out of a major support zone, which is this right here, a multi-month support zone, and then it forms a ledge, the tighter the better, the odds are, all things being equal, especially in a weak market like right now, that it's going to break to the downside. See, you want stocks to bounce like tennis balls. And when it comes down and tests a low, then it bounces right back up. It bounces right back up in a few days. And this isn't bouncing at all. So as you can see, oh, now let me interrupt myself and show you one thing first before we do a little more technical work. I actually know that when I put this out, there were quite a few of you thinking that there's no way this is going to go down. Why? Because of the fundamentals. Let me show you the fundamentals. So here are the fundamentals courtesy of MarketSmith, and this is the quarterly sales number. Great sales the last 4 quarters, 36, 27, 28, 33, and huge earnings per share growth, 41, 59, 58, 67. It's got a 1% yield. It's only priced at PE ratio of 20. It's making $7. It's making $9.4 per share in 2022. It's making tons of money. And this shows us that we can't just blindly assume that stocks will hold up because of their amazing fundamentals. We look at the fundamentals when identifying stocks to go long in, but we let the chart tell us when to get out, because stocks generally break down when their fundamentals are great. That's a really hard thing to learn, and you might have to relearn it over and over the hard way. But if you look at some of these stocks that have broken down and fallen 70, 80, 90%, when they started breaking down, their numbers were really good. It's all about forward guidance and the market's health as a whole. Now let's go back to the chart. So what I told us to do, what I said the strategy is when you see this ledge forming, you buy it when it breaks through the ledge. You might have bought it here and potentially gotten stopped out, or obviously you could have bought it 2 days ago, which would have been a great spot. But what I should have said is that about 50% of the time, it'll wedge up like this. See how it's wedging up? Let me move my cursor really slowly. It's wedging up. That's like the opposite of a flag. And the volume is really weak. See how even though it's wedging up, the sell volume, the red bars, are bigger than the blue bars, the days where there was more buying than selling. And the one big blue bar, this is where it stalled. It closed less than halfway up the daily price. So if when it does this, see, stocks often come up and try to retest what used to be support. This now becomes resistance. So a lot of times they will, maybe 50% of the times, they'll move out of the ledge and come up and retest prior support. Now, so what you can do is try to time when this thing is going to stall out and move down again. Now this particular bar, when was this? Let's see. You see it moves out of the ledge on May 4th, but it closed near the high of the day. Even though it did ultimately move down the next day, you anticipate it going higher if it closes near the high of the day. But this particular bar, May 13th, you had this stalling action on big volume followed by a down day, this would have been the perfect time to go short. And if you had shorted right here, you would have been a rock star. Also notice that it's right up here near the 50-day exponential average. That often, when the stock is above it, it finds support. When it's below it, it often finds resistance. Here's an example right here. Here's an example right here. This stock doesn't track the 50-day exponential as much as others. So yeah, you time when it stalls out, and this would have been really easy to do a low risk trade. You could have bought it, somewhere in this area, and then just placed a stop somewhere right above the 50-day exponential moving average. That probably would have been about a 5. Let's see, actually, instead of guesstimating, let's say you didn't catch the exact top, but let's say you caught it down here. See, look, that's only a 3% stop. So you could have gone short there with a 3% stop, and you still would be in the trade. And if you had done that, you would be sitting on about a 13% gain here. So what do we do as far as when to take gains? So with shorts, I don't like to mess around because these things can snap back so fast, so suddenly, and so unexpectedly. So what I like to do is take profits for half at 10% and then move my stop, backstop it, move my stop to my initial price, the price that I went short. And so then you've locked in half your gains. Then you're essentially free rolling the rest unless something unexpected happens overnight and you get gapped up on. So with this one here, if you shorted up here, then you already should have taken profits on half. And then you could backstop it, like I said, wherever your initial purchase price was. Or you could try to do a technical stop. Like, chances are now it's going to fade for a while, and then it's going to come up, and it's going to try to retest this, what used to be support, now resistance. So you could maybe put a stop in here, maybe about 169, maybe 169.5, and that will probably keep you in the trade if it does a natural reaction and retests. So if you did buy the breakout here, then this is a little bit riskier of a play, but in my opinion, I personally would wait for that 10% mark. And if you were short, you'd be hoping for just another down day or two and then do what I just said. Where the heck, if you are long or if you're short, how far is it going to go down? Well, let's look. Actually, let me look at one that doesn't have annotations on it. Here's the 20-year chart. And this is always anybody's guess, right? But we can, a lot depends on the general market. When the general market turns around, this thing will probably turn around too. Otherwise, if we look at support lines, you've got an obvious support here at 140. That seems like a pretty good chance that it would stop there. Otherwise, you've got this huge support zone between 125 and 80. But gosh, that's a long way down. Is this thing are the wheels gonna fall off? And pun intended, like some of the other stocks that have broken down and moved into stage 4. At this point, it doesn't look like that, but that can change in a hurry. Does this look like a stage 3 top? Right now, I'm going to say maybe. It's certainly, the farther this goes down, this isn't very helpful, the more likely we're looking at a stage 4 top and not just a traditional base. But as you can see, when this thing bases, it bases for years sometimes, from 2018 to 2000, almost 21. That was 2 years. This is almost a 2-year base. This is almost a 2-year base. This is almost a 2-year base. So personally, even if it's going to come back and make new highs, I personally don't like to sit in a base for 2 years. But I'm a short-term swing trader. I usually do a few weeks to a few months. So that concludes our lessons on shorts. I am still short in this thing, but I'm going to close it soon, and I probably won't tell you when. I just will close it. And I'm always, with a short, I'm always happy to just make a profit and get out with my portfolio intact. I really don't like shorting, and it is Definitely harder and scarier for various reasons, which I should talk about sometime. But in an extended bear market like this, if you need to make money in the market and you can't just sit in cash, then shorting and super short-term trading, day trading, I guess is the way to go. How long is the bear market going to last? Let's just add with this bonus thought. So the NASDAQ rolled over November 22nd. That means we're already 6 months into this bear market. Bear markets usually last 6 to 12 months. So we're halfway in. It could end at any time. And most of the bad news, I think we already know it now. The war, the inflation, supply problems. I think a lot of that is pretty much priced in now. And I think the market is ripe to bottom out. So hope's not a strategy, but let's hope soon. And we will just watch the charts and hopefully we can figure out together when the bear market is over. Let me know what you think about this short. If you're doing any other shorts, let me know. I have been doing a lot of really short-term shorts, just, 1 to 10 day shorts. Been doing pretty well, especially with the fangs. Yeah, let's wrap this up. Take care, everybody.